Hey, what's going on, everybody? It is Financial Fitness Friday. I got my co-host, as usual, Dave Bergio. Dave, what's going on, brother?
Jonathan, I'm great. How are you, buddy?
Good, good. So I will be running the shows solo next week. Dave's going to be on vacation, unless you're going to be hopping on.
Yet to be determined.
Okay, figure it out. So this is going to be a quick one. It's designed to be a quick one because usually when we bring lessons or concepts on Financial Fitness Friday, it usually has to do with us breaking it down on how it looks like and how to implement it from the mindset or state of an entrepreneur versus the individual. All right. However, this actually, that's not true. We're going to break it in two ways now. Okay. However, there is one unifying, tying factor that both the entrepreneur and the individual need to monitor for their financial report card. All right. Can anybody in the comments tell me what that is before I drop it? I'll give you guys about 10 seconds to tell me what your financial report card is. I'd actually love to show you one if I could pull one up. You know what? We'll do that at a different time. But your financial report card is essentially your personal financial statement. Okay. And there's a lot of reasons why this should be updated constantly. But the main thing a personal financial statement does is it tallies up your assets, weighs them against your liabilities, and it comes up with your net worth. All right. So the idea here is you want to keep adding assets and keep reducing your liabilities, right? And that's really how you're going to increase your net worth. It's as simple as that. Assets minus liabilities equal your net worth. So this could be cash, could be a business, could be your home, could be investment properties, it could be certain insurances like a whole life
hmm
or term policy. Any of these things are going to count as assets. All your stocks, all your retirements, those are your assets. What are the liabilities? The liabilities are any debts or things that you owe. So a liability could be a mortgage. Liability could be a line of credit. Liability could be any car loans that you have, okay, or boat loans or anything like that. And what this does is it'll show you exactly what your net worth is at all times. So, why does this matter? Why do you want to update it? Well, one, you always want to be growing your net worth. That's the obvious one. And two, it's always good to have because as you get into more advanced positions, meaning when you start bringing on a wealth advisor or when you start applying for an FBA or certain types of programs, they all require you to have a personal financial statement. And I can tell you, if it's not updated, it is a little bit of pain the first time you put it together. But as you continue to update it, it gets easier and easier. And it gives you guidance, right? It's like a map for your finances, it's a map for you on how well you're doing and what you need to focus on. So if you see a lot of liabilities there, well, you probably need to pay down some liabilities and pick better assets. Because if your assets aren't appreciating, okay, that's when you're not going to be building that net worth. Now let's think about this. What assets don't appreciate? Usually cars, usually
Anything
boats.
with wheels or a motor.
Yeah. If it flies, floats, or fucks, it ain't appreciating. Um, holy shit, that's a
It's
bad one.
definitely depreciating, man. Age, man, as it goes on, especially the
Yeah,
last.
yeah, yeah. Except my wife. I love my wife. She isn't appreciating.
That means she watches this show.
I fucking hope she doesn't watch this one. I
Oh man,
didn't mean it like that. Like how stuff just pops out of your mouth. Yeah, that was definitely one of them.
that's the New
But it
York.
it, it
That's the
doesn't
New
make it any
York in
less.
you.
But listen, it doesn't make it less true. People usually aren't appreciating. Okay, there's no value to people
Oh man,
except emotionally and attachments, right? And relationship wise. Okay, like, but
I
if it
can't think.
flies, or floats or has four wheels.
Or fornicates.
It's usually not appreciated.
Can't take a Northeasterner anywhere, can you?
Oh my God. we were going so good. It was so serious. We were giving so much value.
Hey,
Um,
stick with it, man. We good?
yeah. So
That's
listen,
fun.
beyond that, like seriously, back to the basics. It's important to keep a personal financial statement. If you guys need one, just hit me up, or you could just Google personal financial statement. They have the SBA has a version of it. There's a lot of different versions. Most banks have their own, but you could get a great template and just keep it updated. I have one in Excel that works pretty good, and it also allows you to like update and modify, your assets, right? So a house I bought 5 years ago isn't going to be worth what I paid for it. It's going to be worth more. So you want to update that so you keep your finger on the pulse of how much equity you have in certain investments or your house. Um, Now, next, what is the entrepreneur's report card, right? For the business, that is going to be your financials. Okay, so that's a profit and loss and a balance sheet. And I can't tell you, it is so important to keep that stuff up to date. The bare minimum I would suggest doing it is quarterly, and even quarterly is a little lax. I think it's very important to do it at the end of every month, especially if you own multiple businesses, because when you have multiple businesses, what'll happen is you want to be able to keep your finger on the pulse. What are my expenses? What was my income? Where did the revenue come from? Was it reoccurring revenue? Was it new revenue? Right? Like right now, we are um, my financials are up to date, but I can tell you with some of the things in our CRM, we are making sure we want to get and analyze all the lead flow and all the deal flow we have. And so that's a whole project that my team's taking on to get the right data. Okay, it's very very hard to run successfully, whether you run a business or your life, without proper data. Okay, and that's why having these reports is so valuable. Dave, you got anything to add on this?
Yeah, one thing and this could be a completely different Financial Fitness Friday, but I think it's important and I think it's very important for the awareness because a lot of people get this screwed up. I don't know, and maybe it's a conversation you and I can have sometime. When you do somebody's, even for an SBA, are you looking at you looking at their DTI on the personal end?
It goes a little
Sometimes,
bit.
yeah, very.
It goes beyond that. It's going to go credit, right? Once they
Yep.
pass the credit bucket, as long as it's not this beta program that I've had for the last year. If we're talking traditional SBA, what they're going to do is what they're going to do is they're going to take credit, meaning personal, and their E-Trans score.
Mhm.
If that's a pass, great. Then they're going to look at their profit margins, and they want to make sure the loan will cash flow.
Mhm.
All that means is, basically now for every $50,000 in profit you claim, you should be able to get 350 over 10 years from the SBA. The
Gotcha.
exception to that rule is if it's real estate related or you're buying a business, that they can sometimes extend that to 20, 25 years.
Okay,
Okay, if
gotcha.
there's a piece of property attached. But to answer your question, how does DTI come into play through the SBA process? One, it's going to impact the credit score, and two, they look at personal debt, business debt, and they combine them to look at global debt. Okay.
Yeah.
So they want to see what the global debt is. So you could have a business running lean and mean, and then you could have somebody that has tons of debt, and that's going to weigh down their global debt. And then vice versa. You could have somebody that puts all their expenses on the business and their person is fine, but the global debt is still a little bit bigger. Does that make
Yeah.
sense?
Yeah, absolutely. And even on that going back to the whole DTI thing, because mortgages, obviously, most of our clients, and I just want to make people aware of this too. And I'm glad you extended all that there too, so it will make even more sense because this does go for the daily person we're talking about here on the personal and the business, guys. When you're talking about assets and liabilities, keep this in mind too. If you got medical debt or bad debt or anything that's charged off or anything that and everybody and their brother knows you're not going to pay off because of age and so forth, and the fact that it's been written off, it still counts as debt to income ratio. It's still going to look like outflow, right? So just because, hey, I have this old bill here for $5,000 or whatever the case may be, still going to count as a liability, even though everybody knows you're not going to pay it off. So that's important. Now, I'm not saying here to say to pay it right away. It's a completely different topic, completely different show. But just know that if you have debt that's been written off, that's going to count against you too, because I have that question all the time. Well, hey, man, this is bad, or this was taken care of or not. It's a big deal, man. And people get that snuck up on them. So if you're doing a balance sheet, right, and a P&L, and listen, there are a lot of business owners that have quote unquote bad debt or written off stuff. You got to look at that too, man. Like, don't forget about the stuff, even though if it's past statute of limitations, it's older, you're not going to get sued for it, it still counts. So be aware and take a look at that stuff.
Absolutely. And I thought this was going to be quicker, but clearly it wasn't. So I guarantee you guys got some value out of this. I'm probably going to get in trouble for this. It's all good. It's all good. I appreciate you guys. Do us a favor. Comment on this. Share it with someone who needs to hear it. We really appreciate if you could do that for us. All right. Dave, thank you. Guys, have a great weekend. And I'll catch you Monday on Mindset Monday.
Be great, y'all.